Hi, welcome to the Payroll Nerd Podcast. My name is Brian Bright, and I've been in the payroll industry for over 8 years, implementing payroll and HRS software. Goals podcast, open discussion, not just to payroll people out in the world, but to members of all organizations that your function is important. We don't just issue checks, we provide critical information and data to an organization through payroll and HRS software. Employers are the most important resource of any organization. If you don't pay them, you don't really have any. We'll also give you some tips and tricks to make it easier and more efficient for you to work. Today's episode, let's talk about January, even though it's already the 24th. Happy January. I don't really like calling it year end, especially implementation. I like calling it January start, fresh year opportunities. But let me digress, and anybody that really knows me is going to know what I'm about to say here. With the current level of technology, there's no real advantage starting in January. I get that, like 2004, it might have made sense, but with the ability to load data in the systems that I've actually implemented into, there isn't any need. Sometimes there's a business need, like coming off a PEO, right? Maybe they're just like, you need to be gone by December 31st. I've seen that before. But besides from that, like I want a clean start, or my accountant said it's a clean quarter. This doesn't make any sense anymore. Same with like a clean quarter. It doesn't. It's fine. I want to start in March because there could be a huge outlay on unemployment funds, since you probably max out in February or March. But to float from the prior provider, might be difficult for some organizations. I also wouldn't start a large or complicated company in December. But besides from that, I'm just not. This doesn't make any sense anymore. So if you want to, please come with me on my journey to change this and spread implementations throughout the year. It's really what, if I could wave a magic wand, that's what I would do. Get rid of it and spread it out. In my experience, May is the best month. Right before vacations, things like that. People are focused. They're done with April. May is where I would start my implementation. Anyways, let me set a scene for you. Maybe implement a new platform. Maybe you're new to this whole payroll thing, and it's the first time you process payroll in a new year. What are you looking for? Number one, minimum wage changes. Since this is based on days worked, not the check date. So if your payroll is split, let's say 12/26 to January 8th, only half of that would be at the higher rate. You can defer and just pay pay increase for the entire rate. Maybe use effective or data field options in your payroll platform. It'll like fix that for you. Or you can just be like, all right, well, let's just give everybody a minimum wage for 4 extra days. Number two, changes in tax tables. This is a big one, especially with salaried employees. The IRS adjusts the tax tables based on inflation and other applicable tax laws. So with the huge inflation numbers in 2022, you're going to see a bigger change than you might have done in the past. GTL. If you have a taxable event for GTL, use the IRS age-based method. The age is based on the employer's age as of the end of the year, so 12/31/2023. We change brackets like from 34 to 35. It happens in January 1, even though your birth date might be in November. After 45 years of age, those amounts can change up to 50%. So somebody would turn 45 this year, right? Their GTLs can go way up in the beginning of the year, and they'll notice that. Number four, unemployment rate change. Some states change for January 1, and some like New Jersey change in July. Actually, I believe Jersey changes twice, once for an employee and once for the employer, different dates. I mean, come on, New Jersey, get it together. It's crazy. Number five, wage-based resets. You'll be paying your unemployment liabilities again. Maybe your organization has all salary employees and you're not used to paying this because you maxed out in February of last year, right? So those start again. Number six, changes in benefits. Many companies are on January 1 benefit year. You might have even done open enrollment 3 months back and didn't really remember. If there are any changes in medical premiums, this can really change the taxability of a check and make changes to the take-home pay when nothing else has really changed. Time off accruals. Maybe you have a January carryover. You should really switch the anniversary date and listen to my first podcast. If you don't, maybe you give time based on seniority and that accrues in January. And if you can, number 8, take your time. If you can, check out your check. This might not be possible. Maybe you need a friend, but you should be able to explain any differences to employees. Especially my frequent flyers. Those are employees that always come to your office or hit you up on Teams. Like, when they're salaried and they're paid a penny less than last time because of rounding. But if you can review every check and be like, all right, last year your net pay was X, now it's Y. Here's how I can explain that. So then you kind of be proactive, right? Like, how do you deliver this kind of information to your teams? Is this something that you do proactively, or you just wait for them to come to you? Many clients' HRS payroll platforms have engagement or messaging tools. The tax table, GTL, benefits, time off balances, items that can be openly discussed with your team, at least in general terms, right? You'd be like, hey, here's the IRS guidelines for GTL. Yours might change. Remember, the tax table changes, so if you're salaried, you're going to make a couple extra bucks. Even an email from your head of people operations or leadership can at least drive back some of the questions. Let's take a break. Many new laws go into effect January 1. The really big one is salary transparency, but I feel like this is its own episode, honestly. Italy has a big one. It's called ODRISA, 1 day of rest in 7. Really, the big piece is 7 consecutive 24-hour periods. It used to be in Illinois per calendar week. So somebody could effectively get a Sunday off all the way through to the next Saturday, 13 days in a row, and still be in compliance back in the day before this law went into effect. Also, if you do shift work, those 12 hours, you need at least 2 periods of 20 minutes of a meal break or any other kind of break. Remember, meals under 30 minutes are breaks to be paid as opposed to unpaid meals, which is 30 minutes or more. That's FLSA. That hasn't really changed. So if you're giving people 25-minute breaks, those need to be paid. Massachusetts, looks like Massachusetts has a pay rate of 1.1 times on a Sunday. Time off on January 1 other holidays, but that's now been eliminated. California added unpaid bereavement leave for companies with more than 5 employees. If you've been there at least 30 days. Maryland, minimum wage. I saw when I was doing some research on this. The schedule is a couple years old, but I thought it was interesting that they broke it up with employees 14 or less. So they have a fight for 15. If you're a regular employee with more than 15 employees, you need to do it by January 2025. If you have 14 or less, you have to July of 2026. I thought it was interesting they would break something like that out. But after inflation, fight for 18 now, right? 20 even. And the IRS mileage rates IRS mileage rates up to 65.5 for business use. All right, so now for my crime and payroll segments, which I know is my crime and payroll podcast pretty popular. We're talking about the story of Ireland because we talk about the Garda. I love the name, the Garda. It's the National Police Force of Ireland. I just like the name. I think it's hilarious. It's Garda. It's like, I don't know. I find it really funny. Anyways, Kelly Walton is somebody who's Irish. She worked for Virgin Media. Stole about 872K in euros. So it looks like she was using something called casual employees information. Since I'm in the U.S., I didn't know what a casual employee was, but it's like a temp worker. Everything in the British Empire just sounds way fancier. So she would change their direct deposit accounts to an account that was hers, and then make a payment to a terminated casual employee, and then pull the money out. So let's say you had 3 temporary employees for 3 months ago. Maybe last time they worked was a month ago, and then they were gone again. And they come back 2 months later. So errors when they weren't being paid, she's throwing a couple hours in there, and then throwing into a direct deposit account of hers, and then changing it back. So yeah, 872,000 before somebody in the accounting firm and said, "Hey, I paid this extra money. This doesn't make a lot of sense," and they backtracked it. So how do you stop something like this, right? So having a robust direct deposit change report would be helpful. So maybe you're a smaller organization and you look at direct deposit changes. Some payroll softwares I know, when you process payroll, it'll say, "Oh, there's direct deposit changes in this group." 1 or 2, maybe you're not doing anything, but if you see multiple, it might be an issue. I do know at some service bureaus, they have a finance audit team that looks for they run when a new payroll is run, it gets triggered on a report that, hey, this direct deposit changed. Then somebody will do some research and then see if it's not like an employee, if it's an admin or maybe even internally. You'd be like, why was this changed? but it does come through like having the person that loads all the payroll data and does a first time review. Having a second person to look at, actually push the button could be helpful. That's something you can afford for an organization. That somebody loads it all up, makes all the checks, and then goes through and just double checks it. It's hard though, right? Because for payroll to be effective and then do the roll effectively, you need access to sensitive information. I mean, you just do. Like, you need to know rates. I don't know how you do payroll without rates. But that was a request I get quite a lot in implementation where, hey, I want supervisors to check hours, but not rates. So there's double checking hours. So this is important that, somebody in this case noticed that too much money is being taken. The accounting department is like, this wage bill is way too high. So it's important that having an integrated system, ability to determine if something looks off is important when you're integrated with your accounting software, so you kind of know what your labor should be. So that's really important to see. So that's this week's episode. I hope you enjoyed it. Don't forget to subscribe. If you want to follow on Twitter, it's at Payroll Nerd Pod. And all the source material for today will be in the show notes. Thanks a lot. Thanks to everybody that listens, even though I haven't recorded something in 6 months. But I was getting a lot of traffic lately, so I decided to go throw one out there. Thanks, and have a great day.